Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Wednesday, December 10, 2014. You had a pretty decent, good sell-off day in the market. Yesterday, I told you that is a possibility that all we were going to see was this sell-off yesterday because we had somewhat of a reversal day in the market, but I said there could be more downside, and here we go. Okay, so I even got a little fooled yesterday, and that's what markets are designed to do. They're designed to fool us. And I sure enough, I'll admit it. I did get a little fooled yesterday, but nevertheless, there's more downside to come. So here we are. So today you had a higher volume day than yesterday. Today on the Spider you had just about 160 million shares. And yesterday you had about 122 million shares on this up day here. And I would suspect that there's more downside to come. Originally, I was telling you that my first target right here was about 202, 201, 85, 90 in that neighborhood. Okay, this pivot high. And that still holds true. So I think we'll probably get there tomorrow. And then my next target would be the 50-period moving average. And then on a real heavy sell-off, we're probably going to look for this gap fill here, which I told you about a few days ago. This would be at about 196 and a quarter. And that's the extent of it is in my book. Now, in order to get down there, you're going to have a real scare in the markets. And that could happen because the energy sector is real weak. And I'm going to talk about crude oil in a minute. Or in a couple of minutes, but that's really the catalyst. What's driving the market down, and we'll get to that in a second. So let's go over to one of our favorite market indicators, which is the IWM. Okay, and the IWM had a real good down day today. In fact, let me get you the percentage. The IWM was down over 2% today, 2.11 on 45 million shares. But here's the deal. Yesterday, I believe we had about 52 million shares. So it was just interesting how on this reversal day yesterday, we had heavier volume than we did on today, which was a down day and a heavy down day nonetheless, over 2%. So in my book, that means that there's certainly can be some more downside in the IWM, but I'm not looking for an all-out collapse. And, my absolute maximum target would be the same gap fill that I just showed you in the SPY, and that translated over to the IWM would be 111. But that's going to take some heavy selling. Another, 7 points down in the IWM is going to be a heavy sell. And we'll see if it gets. I don't know that we get there, but if you want to, the stops along the way are pretty obvious. You got the 200-period moving average over here that'll provide some support, and the 50-period moving average at 113 and a quarter, 113.32 over here, that'll provide some support. And if the selling accelerates, then you're going to look for this area at 111.50 and then 111. We'll just call it 111 even to make it simple. All right, so that's what we see. If you go over to the weekly chart of the IWM, it's quite interesting because this is a bullish pattern. So as long as you stay above this big up move here, this big up day, okay, and the low here is about 110. So as long as you stay above this green candle, all right, this is still a bullish pattern setting up to go higher into the end of the year, and I still say we're going to get the end of the year rally, and I think that will begin on at least Monday at the latest, or Tuesday at the latest, but I think the selling should probably abate by the end of this week. Next week is options expiration, and there'll be a lot of whipsaw action options expiration. And if you remember, and I tell you this every month, during options expiration, what you'll find is a lot of stocks, for example, that have had heavy selling pressure into options expiration will tend to rally during that week, and vice versa. So if the market was up heavy into options expiration and a lot of stocks were up accelerated on the upside during the week before, they tend to sell off during options expiration. You'll hear a lot of game playing, a lot of rumors, all kinds of stuff during options expiration. That's typically what happens. So I just want to talk about a couple of stocks that are interesting that I've got my eye on, and I'm going to kind of give you the inside baseball picture. All right, we're going to go back over to the daily chart of Alibaba. And Alibaba, where would I want to buy Alibaba? Well, the natural buy point in Alibaba would be, you see this consolidation here, and then you had a breakout. All right, so this would be a natural level, and it's right around the 100 level. You probably overshoot it a little bit, but somewhere between 100 and let's say 98 on Alibaba, all right, down here would be a good buy level. You should get a natural multi-day or even multi-week bounce once you come into this level here, because this was a natural breakout, or this was a breakout, so you should get a natural support level right in this area. And my guess is it'll probably break through 100, the big round even number, but not by much in my book. So that's an area you can look to play. And let's go over to Google. And Google, what I have here is I like Google almost right here. I liked it yesterday. I like it today. I don't think it's going to come much below 520, 525. If you come below this low, which was 520.50 yesterday, then you might have some more selling pressure. But if it stays above this green candle here, then Google's probably a buy at the end of this week, beginning of next week. Okay. One more stock that I'll talk about, and I'll give you some inside baseball on, is Apple. I know a lot of people like to play Apple. So where would we buy Apple? Ideally, okay, you'd buy Apple at this gap window here at 101 and change, but I don't think it gets there. So my best estimate on Apple would be this breakout here, okay, where it's really started the up move in earnest, and that's right around the 105 level. You came in here. This showed some support. This was a natural level of support in here. Okay. But if we come below this level, we'll test the 50-period moving average. And if we come down there, then probably this next breakout area, same kind of scenario, but on a micro level as Alibaba. So 105, 108. Anything below that, if you really started to scale down in Apple, just stay away until it finds some chart support, and I'll keep you updated on a daily basis on this one, and we'll kind of see where it goes day to day. So that's my take on that. All right, let's go over to gold, and then we'll talk about the crude oil. Gold. Okay, so gold had basically a nothing day today. The GLD, what was GLD today? It was GLD was up 6 cents. That's a flat day, and we're moving up to this area that is 120.5 that I told you would be a good natural resistance point on the chart. So I think we'll get there. Whether we get there in the next day or so, I'm not sure. But again, this is now in an uptrend. Okay. Low, higher low, higher low, higher low. That's a bullish sign in the chart, right? That's a bullish pattern for gold. You have central banks printing all around the world. You have Japan printing money. You have the ECB that's going to, they're going to come to the window and with a printing program. They've got some printing presses on order, and that's going to push gold higher because of the fear of inflation. Okay, that's what's going to be the catalyst for gold. So if you're in the gold trade, I know a lot of members are in the gold trade from down here. Stay with it, okay, because it's going to go higher into next year. This isn't a 3-5 day trade. It's not a week or two trade. This is a position that you can hold until the chart tells us not to hold it, okay? And I'll let you know when that is. This is your first level of resistance. This is your next level of resistance. Then you have this gap fill up here at 124, and then you're going to have this area at 126. All these levels, in my mind, they're going to get hit at some point in 2015. So this is a trade you can stay with. All right, let's go over to oil. I'm going to bring the USO chart up, but you can't really tell anything from the USO chart because the USO on a daily basis tracks oil, but on a weekly basis, or even a monthly basis, which is more important in my book at this point, there's nothing doing. This is not a true chart of oil, okay? Because this doesn't go back far enough to give me the proper levels of where the support levels would be based on the Fibonacci retracements. USO just doesn't give it to you. So I'm just going to give it to you verbally because I don't have the CL or the crude oil contract on this platform here. So basically, we're coming into, you almost hit the 60 level today, okay? And right now we're trading at 61.65, but we hit a low today of about $60 and I think 54 cents if I'm not mistaken. And in my mind, you have to get to 60. You have to get to the round number of 60. And once that happens, maybe you pierce it by $1 or $2, but 60 should provide decent level of chart support, at least for the time being. And I'm not saying that's the bottom in oil by any means. I'm just saying that it should provide a decent level of chart support. And once and if, or if and once, you bounce off 60, 58, 59, 60, and you move higher, and it puts in, I'm looking for a reversal day, okay? And a reversal day would look like hitting a low during the day, reversing on heavy volume, and then finishing positive for the day, and hopefully at the highs of the day. That would be a bona fide reversal day in oil. And if we get that, okay, you're not going to look for oil at $80 or $90 or $100, okay, but you can certainly find $10 or $12 in the price of oil, in weeks, or even less. It could happen because it's so oversold. There's so many shorts in oil. And the whole energy sector, there's a lot of shorts in the energy sector. They're going to start to cover, and buying begets buying, and it's going to force the whole energy sector to inflate because of all the selling pressure and short pressure that's been on it for several weeks. Okay, that's going to reverse at some point, and they're going to cover. All right, and that's going to be a time when you can step in and buy the energy sector, and the members who are my subscribers are going to get energy plays probably in a couple of days, probably either Friday or Monday. They're going to get at least 3 or 4 energy plays that are on my radar screen that I'm just licking my chops on because I expect oil to bounce at 60. And if it doesn't, okay, there's another level that's not too far away that should provide very, very good support. So, and that level would be more like, it's kind of in $5 increments at this point. So that level would be right around the 55. To be exact, it's like 54 and change, but that's not important right now. And if that happens, that should be the interim low or short-term low in crude oil. So that's where we are. And what you're going to find over the next few days, if the market continues lower, and as a result of the energy sector continuing lower, what you're going to find is you're going to find the market participants, right? The traders, the investors, the holders of energy stocks, they're going to throw up. They're going to start to capitulate, and that's going to be the beginning of a bottom. That's going to be your capitulation bottom. You're going to find a reversal, and typically what you'll find is that the average investor will sell at the low and buy at the high, and I expect no different in oil this time around. Just like they buy the top of Apple, they buy the top of Google, they buy the top of oil, they buy the top of gold in 2011. That's never going to change. It just happens over and over and over. And here we come, another perfect example of what we're going to find in oil. We're going to find the average investor is going to capitulate out of their holdings at the low. It's almost like a guarantee. There are no guarantees in this business, but this one is as close as you're going to find, and I expect that it's so close, I really do expect it to happen this week. So if you find oil headed down and you find the energy stocks really throwing up this week, and you find that reversal day I'm looking for, and I'll let you know when I see it, that's going to be a sign that there's plenty of upside to be had in the energy stocks from that point, at least into the end of the year and into the beginning of January. And there's going to be really, really nice gains to be had. So that's my take. I hope that's helpful for you because I expect it to happen. So look for it. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.